as we move into the this afternoon session. Okay, so basically, my target audience for this afternoon, you will probably be either a first-time private home buyer, all right, or you are a HDB owner thinking about upgrading into private homes, or perhaps you are even considering buying a second property for investment. Okay, so let's take a look, all right, at the private home market. The statistics will be as at the first quarter this year, because the second quarter's results are still pending. As we know it, we are seeing a very strong uptrend, and private property prices are now 4.9% above the last 8-year high. All right. So the last 8-year high was somewhere in 2013, and we're now 162.2. If we look at over the last couple of years since the last cooling measures in third quarter of 2018, we have seen seven quarterly increases compared to 3 quarterly decreases. So overall, the trend is up since the last cooling measure. Okay, and since the last cooling measure, we've gone up by 8%. So if we look at the latest statistics, the last quarter's upswing was largely led by landed property as well as non-landed properties in the rest of central area. So this is just to give everyone a flavor of the state of the current market. There are 3 things that we should know why the property market is so hot. Firstly, it's largely driven by the ultra low interest rate environment. So as you know it, the current interest rate is extremely low. And so if you were to leave your money in the bank and do nothing with it, actually, it serves you no good. All right. So low interest rate environment actually boosts the housing market. And most people who can afford it are actually putting their money in real estate because there is something tangible and they can see. We have seen various tranches of low interest rate environments, and these usually exist during periods of crisis. So for example, the Asian financial crisis, we saw a big plunge in the interest rates, right? Followed by SARS 2003, and the global financial crisis also saw interest rate coming down. And now we are in the COVID period, still right in the midst of it. And so you will probably expect interest rates to continue trending low. As some of you would know, Singapore's interest rate follow very closely to US interest rates. And US has recently, earlier in the year, said that their interest rate is expected to remain low until for another perhaps 1 to 2 years. So we can expect to see this trend continue, right, for the near future. So when you have ultra low interest rates, you will see more people buying property, right? So as we have seen, interest rates trending low, right? So as now you see the 3-month SIBOR is trending low, and then you will also see property buying wave after wave. So that's why it's no surprise that the market is on increase. All right. Secondly, if you save money, all right, inflation risk is not to your advantage. Though inflation is very low in Singapore, we still have inflation. All right. And so there's this perennial question is, if I put my money in property, is it a good hedge against inflation? All right. We have always been taught that property is a good hedge against inflation, but property prices in Singapore, the other thing to think about is that the government measures like the cooling measures do keep property prices from running away. So is it possible that with the controlled level of increase, I can still make money or against inflation. All right, I'm still better off than other kinds of investment. So if we look at the private property market, okay, let's just compare amongst, let's say you have $1 million and you can choose to just leave it alone, do nothing, okay, and see what inflation does to your money, okay. So for example, if you have $1 million and you do nothing with it, okay, the inflation from 2017 to now, okay, you need 1.022 million to break even. Okay, so let's take a look at what various forms of investments which is better off, okay, than just that will give you a better return over your compared to inflation. If you like, most conservative people just leave their money in the bank to earn that miserable fixed deposit interest rate. You are 1.015 million now, right? And if you compare against inflation, the break-even factoring in inflation of 1.022 million, you are worse off. So if you leave your money in the bank, inflation is making you poorer. What about if you invested in the stock market? As we know it, the stock market carries risk, right? So, and these risks are sometimes beyond our ability to comprehend and control. So if you are a retail investor in the stock market, you are essentially a price taker. So if you're not careful, you are now 930,000. All right. And that would be a negative compared to inflation. So if you just put your money in real estate and over this short 3 years period, okay, just riding on the property price index, your property value will be worth about 1.169 million. And that puts you above the break-even point after we have factored in core inflation. So this simple chart shows you that property is indeed a good hedge against inflation. What about the perennial thinking? I wait for the best price. Property price is going up. I should wait for the price to come down. And if the cooling measures come, then the price may go down. Well, you are likely to be wrong, because if we look at the first quarter of 2020 compared with first quarter of 2021, all right, for new condos, we have seen just Singaporean buyers, all right, the percentage change in the number of buyers is almost 75% increase in the number of buyers from first quarter this year compared to first quarter this year. What about resale? Resale transactions has essentially doubled if we compare first quarter of last year with first quarter of this year. Bear in mind, both are still in the COVID period. Now, I want to spend a bit of time talking about certain limitations of the HDB flats. So like most people, most of us, me included, started our journey with our HDB flat. The HDB flat was the first property we bought. Of course, I've since gone on to buy and sell property, and I don't own the HDB flat anymore. So I want to share with you some limitations that I've come to, observe about the HDB flat. Whether we like it or not, HDB flat owners are now account for about 79% of the population. All right. So the HDB flat therefore has to remain affordable. It is not an investment product, and therefore it is a market that is tightly regulated and controlled by the government. Their sole objective is to ensure that whether new flats or resale flats, they are to remain affordable. So if you sold your flat, you will find that very often your buyer, the one who bought your flat, has to ensure that his valuation is matched by the HDB. The valuation is not determined by private valuer. in today's context. Valuation is done by HDB side, and the HDB value, in this way, you will find that valuations tend to not increase as fast as the rate which property prices are increasing now. The fourth point is that there is no way HDB flat owners can do any collective sale. Why? Because the land on which your HDB flat is built does not belong to you. All right? It belongs to the government. So therefore, there is no land element in a HDB flat. So the rise and fall of a HDB flat value is very much determined by the value that is placed on that value of that four walls that surround your flat, not on the land. The land has no impact. Okay, land prices have no impact on the prices of HDB flat. So what is real is something like this. Many HDB flats, as they age, is a depreciating asset. Of course, some may argue that recently we have read in the newspaper a lot of $1 million, a lot of millionaires are in the HDB flats. But if you look at those flats, those are new flats, newly turned MOP flats, high floors, fantastic view. But for the vast majority of aging flats, there is a problem. Okay. For example, most people, okay, when they first come and look at the resale flat, they will be asking this question: how old is the flat? How many years left in the lease? Why? Because it is a known fact that as the flat ages, there will be certain restrictions. So you will find that at a certain point in time, the value of a HDB flat will start to depreciate and in a straight line. And because there's no land element left and no avenue for en bloc, because the en bloc is actually determined by the landowner, and not all HDB flats qualify for the selective en bloc program. You'll find that at the end of the day, when your flat reaches 99 years, it is zero value. So some people say that after some time, this asset, while it has appreciated, rise and fall in the earlier years, after some time, it is a depreciating asset. Then, why private property? All right. If you own private property, and private property is proven to be a better wealth multiplier for a very simple reason, that if you own a private apartment, for example, you own a strata title. You own your condominium, your unit that you own, and you also collectively own the land on which the condo is built. And you own it together collectively with the other condo owners. So, which means land price will have an impact to number one, to be able to even a resale private property gets older, all right, its value can sustain, right? Why? Because land price is on the upswing. As we know it, land is very limited in Singapore, and government sells land by an open land tender system, right? And land prices do appreciate over time. So therefore, the market value of properties, all right, is determined by the market itself, not by the government. Okay. HDB flat owners, now that you may be considering upgrading to private condominium, the first thing you have to do is to check whether you are eligible to buy a private property. Okay, so this is from the HDB website. There is a minimum occupation period which you are required to satisfy, and the MOP is defined as the period of time which you are physically occupy your flat before you can sell it in the open market. So MOP is calculated from the day you collect your keys to the flat, and it excludes the period that you do not occupy the flat, such as the time where it's rented out or where there's an infringement in the flat lease. Okay, so as we know it, it's if you buy direct from HDB BTO program, your MOP is 5 years. If you have bought the flat from the open market with CPF housing grant, it's also 5 years. If you buy it from the resale market with no grant, it is also 5 years. All right. So 5-year MOP. Now, I want to share with you a real case study. This really happened to this owner. All right. Of course, I just use another name. All right. So Peter was a single guy. He was single. He bought a 3-room flat in the resale market in the year 2015. All right. The flat is under his name. Nobody else's name. He bought it as a single. All right. So in 2017, 2 years after he bought the flat as a single, he married. He married Wendy. All right. So Wendy's name was not put as the owner of the flat. Okay. So since then, they decided, oh, since Wendy's name is not in the flat, all right, as the owner name, they use Wendy's name to buy a private new launch project in 2018. Okay. Any problem? What do you think? Okay. So the end result, this I want to share with you, and not many people know this. The minute, okay, in the year that Peter married Wendy, even though her name is not added to the flat as a co-owner, okay, by default, because of the marriage, Wendy becomes an occupier of the flat. Okay, and the 5-year MOP, as we know it, applies to the occupier. So the mistake they made was that when they used Wendy's name, thinking that, oh, we don't have to pay ABSD if we use Wendy's name to buy the private property in 2018, HDB found out about it. They ended up paying a hefty fine of more than $70,000. So, what's the moral of the story? If you put it that way, I mean, if you look at the facts of the case, actually Peter didn't know about it also. I mean, any logical person would not have figured this out, correct? So, but there's a by default. By default, you become an essential occupier because of the marriage, and the MOP of 5 years apply to the essential occupier. So one way to prevent things like this from happening to you, if you are HDB flat owner considering to upgrade to a private property, let me share with you how to not get into trouble. All right. If you go to, you can find out whether you have met your MOP by going to the HDB page. All right. You can log into your My HDB page with your SingPass. Okay. To check if you have met your MOP. All right. So if you click on, once you have logged into your SingPass and you click on your flat details, you scroll down to the MOP, the minimum occupation period. And if you have met your minimum occupation period to sell your flat, it will indicate there as yes. So in Peter's case, he could have avoided this, all right, by going to the portal to check on this before he think that it is safe for him to buy the flat under Wendy's name, because it would have indicated no. All right. So something for you to try out. For those of you who are HDB flat owners, do have a log into the My HDB page with your SingPass and check it out for yourself. Okay, the next most important consideration as far as new, okay, those who are thinking about buying private property, is this perennial question of how much can you afford? All right, so now I want to share with you some budgeting considerations. So let's look at the center column first, all right? So those of us who are buying private property for the first time, or you are existing property owner with no outstanding property loan, that means you have fully paid up your loan, okay? you're eligible for a maximum loan quantum of 75% of loan to value. Now, for those of you who are new to this terminology, loan to value means if you buy a private property, just you need to ensure that the valuation matches the purchase price. So you buy a private property, $1 million, valuation is $1 million. Your maximum loan quantum is 75% or $750, 750,000. So you need to put down a mandatory cash amount of 5%, and then 20% can come from your CPF. If your CPF is insufficient, then the part of it will be coming from your cash. Okay, the other budgeting consideration depends on the price of property. You have to pay the stamp duty accordingly. So the formula to calculate stamp duty, if the property price is less than 1 million or less, you take 3% times the price minus 5,004. If it's more than 1 million, then 4% times the price minus 15,004. So for Singaporeans who are buying first property, no ABSD, your second property, 12%. Okay, legal fees budget for around $3,000 to $4,000. So what property price can you afford? First, you have to establish what is your total debt servicing ratio ceiling. All right. So take, for example, if your income is $10,000, okay, so your 60% debt ceiling will be $6,000. While you are able to use the entire 6%, I personally, my personal preference is I'm always conservative. All right. So conservatively, you use 40%. You don't max up your debt ceiling. All right. So 40% of that is $4,000. So assuming you allocate $4,000 a month to service the loan, all right, you next have to establish how long you can borrow the money for. Okay. How long you can borrow the money for. Okay, so 65, the banks will use 65 minus your income weighted average age. So for example, that works out to be 30 years. All right. So what is income weighted average age? The bank looks at how old you are and how much you own, how much you earn. Sorry. Okay. So if it's a joint borrower, then both of you, they will look at your age and your respective income. So if the older person earns more than you are older couple. If the younger person earns more, then they say you are a younger couple. So 65 minus that age is the number of years loan. And from there, the bank will calculate the loan amount. And with the loan amount, if you're eligible for 75% loan, you just divide by 0.75. That's your property price. So this is the step. Okay. So assumption, let's use a simple example. Let's say we have a couple, their income weighted average age is 35 years old, their monthly income is $10,000, debt ceiling is $6,000, and they are able to use $4,000 to service the loan. So they are eligible for a 30-year loan on the right-hand side. And when you go to the bank to borrow money, even though today's interest rate is super low, you can get a housing loan for around 1% plus minus. Okay, banks still use 3.5% interest rate to calculate how much money you can borrow. This is a statutory requirement, and this is how the banks compute how much you can borrow. But, okay, so based on, let's say the loan amount is 890,000, okay, then assuming this is 75% of the property price, that means your property price that you can buy, okay, you take 890 divided by 0.75, that give you 1.186. Right, so if we break it down, your loan amount is 890,000. You need to have 5% cash, 20% from your CPF. You should have that amount. If you don't have, then the difference will have to be cash. And you need to set aside interim cash for the buyer stamp duty. I will explain later why you need to stand by this stamp duty cash amount. Okay, and then of course amount for the legal fees. So if I put it together in a table, all right, based on your income level of say average out, say 12,000 to 14,000. Okay, I take that as the midpoint. You will notice that the majority of buyers who are within the so-called comfortable range to afford private property, their price range that they will be looking at in today's context would be about 1.4 to 1.6 mil. You're not maxing out your debt ratio. Okay, so I'm basing on 40% of your TDSR instead of 60%, though you can use 60%. All right, so I'm just like to play it down a little bit, right, so that you can see that you can have some element of buffer for prudence. All right, that's my preference. Okay, so with that, all right, why do I use that figure? You notice I draw a black line there, right? So you will, if you look at statistics from HDB address, okay, buyers with HDB address. Normally, they will be looking at the outside central area. So these are resale statistics, but the HDB flat buyers who are buying in the outside central region, which are the suburban region, you will find that the sweet spot is 1.5 mil and below. Those account for the majority of the transactions. So for new launches, it is also majority 1.5 mil and below. All right. So that's why I use the figure of 1.4 to 1.6 price range. Okay, a few important points, all right, for those who are buying property. Always start young. This is one of my regrets, all right. As I look back in my life, I should start younger. That's why the younger you start, the longer your runway. All right, and you can. All right, I started later. All right, so start young. All right, the older you are, the shorter your loan period. So if you waited too long, then it's to your disadvantage, because if the older you are, the shorter your loan period, which means the higher your monthly installment, the lower your loan amount, and this affects the total price that you can afford. Of course, you can buy a property with higher price, but that simply means you have to come out with more cash. So the next favorite question is, should I buy first or sell first? All right, should I buy first or sell first? All right, so let's just do a simple comparison. Okay, if you look at the left-hand side, if you buy first then sell, okay, the advantage is you don't have to rent a place, right? If you buy a resale property, you can buy it, complete it, okay, then move in. However, if you're buying as a couple, your names are already in the current property, then you would need to pay for the ABSD of 12%. So a $1 million property, 12% additional buyer's stamp duty is $120,000. Okay, then initially you'll be stuck with a lower loan to value ratio. Mandatory cash amount is higher, and there will be limits on your CPF because you need to set aside, okay, what we call the basic retirement sum. So, for example, even if you're not 55 this year and you're going to buy your second property and you have used your CPF to pay for your first property, then you have to have a total of 93,000 this year in your CPF account. So the 93,000 can come from your special account plus your ordinary account. Add up together must have 93,000. So the excess amount above that, then you can use for your second property. Also, there will be a transitional period because you have to be paying for 2 mortgages. So are you able to do that? And then even after that, after you move over to the new property, there will be a time frame for you to sell your first property off, 6 months. All right, you have to sell it off within 6 months, and no extension of time is given. So if you are able to meet the criteria on the left side, then well and good, you can buy first then sell. But if you're not able to meet the criteria, then you would probably need to sell first then buy, because right now, since last year, all right, there will be no more extension. So if you buy a brand new project, for example, there's no more extension of option to purchase. That means no more reissue. You have to be ready, then you buy. Okay, so if you sell first then buy, the question is, where am I going to stay? Right? Because where am I going to stay? So obviously you need to rent a place to stay. And some people have done a calculation that even though they rent a place for the next 3 years while waiting, next 2 years to 3 years while waiting for the project to complete. Okay, of course, if you buy a resale property, then you just need to perhaps negotiate for a 3 months extension of time after you sold your HDB flat for you to stay on so that you can transit over to a resale property. But if you're buying a new project, then you have to factor in that 2 years or 3 years construction period. Look at when the TOP is, estimated TOP, and when you intake your key. So you probably need to account for rental, right? The advantage if you sell first, then buy, okay, as long as the buyer of your property exercises the OTP, you don't have to wait for legal completion. Once the buyer exercises the OTP for when you sell your property, you will not need to pay ABSD when you buy the next property. Okay, so you can also qualify for a higher loan to value ratio, right? Mandatory cash become 5% versus 25%. And the amount that of CPF that is refunded to the CPF from the sale of your first property can be reused for a second property. So there are obvious financial advantages if you sell first then buy. So the only inconvenience perhaps is you need to account for the transition period where you need to rent a place to stay. So next question, is it a good time then to sell my HDB flat? All right. So let's take a look at the resale HDB market to get our answer. So if you look at the HDB resale market, it is on a very fast upswing. The graph tells you so. It has been up for the last fourth quarter. The last 4 quarters have seen an upswing in the HDB resale price. So time is good if you are considering selling your HDB flat. Where are we now? Compared to the last 8-year high, we are just 4.8% below that point. So after stagnating for so long, we see a huge upswing. So first question some people get asking is, how come? Why is this so? The sleepy HDB market has suddenly awakened, okay, over the last 4 quarters. Why? Okay, so if we look at private home prices compared to HDB prices, we are seeing a similar upswing. So the last 4 quarters are seeing an uptrend. So primarily the delay in BTO completion and the longer waiting time, all right, for new HDB flats. If you book a HDB flat, you have to wait much longer, 5 years or more. That is pushing a lot of buyers back into the resale HDB market. All right, these are recent newspaper coverage. You will see that primarily because of the delay in HDB BTO. Actually, that is the cause of everything. All right, has caused a disruption not only for families, but it has caused an upswing in the resale HDB market. So if you look at the volumes speak for themselves. Mind you, we are in a pandemic. All right, COVID-19, still in the midst of it, but there's a huge jump. All right, once you got into phase 3 in the 3rd quarter of last year, you see boom. The transaction is very, very high. So very quick question, if you're a HDB flat owner, where are the hottest HDB estates? So if we look at volume-wise, the top 5 HDB volume comes from Punggol, Sengkang, Tampines, Yishun, and Bedok. These are the 5 estates with the highest resale HDB transaction in the 1st quarter. Highest number of flats are turning 5-year MOP this year. These are flats that were built 5 years ago, all right, that were handed over 5 years ago, not built 5 years ago, handed over 5 years ago. So they are reaching 5-year MOP in 2021. Quite a number of new flats. And studies have shown that upon turning 5-year MOP is quite possibly the best time to sell your flat, because that is the part where you have a lot of buyers who want to buy your flat, and you are able to use the profit and the higher price that you can get to upgrade to private property. In fact, that is what most people did. That is what I did also when my 5-year, when my BTO flat turned 5 years, many years ago, straight away I sold my flat and upgrade to private property. Okay, so the top 5 highest HDB estates with the median prices above 500,000. So of course, these will be the more centrally located, all right, like Bukit Timah, Queenstown, Bukit Merah, Bishan, and the central area. Now, let's talk about moving into private property market. So assume you sell your HDB flat and you want to buy a private residential property. So what are the milestones that you need to be aware of? Okay, so this is a transaction timeline. Let me just quickly run through it. So you're buying from someone who is selling you his existing property. All right, so go for your viewing. You see a short list of the properties. First, you need to do your budgeting. So after your budgeting, then you go and shortlist the kind of properties that fit your criteria. Okay. After that, always negotiate the price. And let's say you agree on a price, then this is the timeline. So generally, seller will expect you to put down a 1% option money. So if let's say your agreed price is $1 million, 1% option money will be $10,000. So option granted by the seller. Normally it's 14 days, but the option period is negotiable. You can ask for a longer period or shorter period. Both parties have to agree on the option period. So assuming it's a 14 days option, then the buyers will exercise the option on, no later. Okay, you can exercise earlier, but no later than 15th of June. Okay, and you will pay the 4% option exercise fee. All right, in accordance to the contract. So the contract will usually say pay to the conveyancing account. All right. So once they exercise the option, the contract becomes legally binding. That means you have to complete the contract. All right. You cannot back out already. All right. If you want to change your mind, you have to change your mind before you exercise the option. Then you will lose your 1%. That's all. So within the next 14 days from the time you exercise your option, you have to pay the buyer's stamp duty. So let's say the property price is 1 million, you need to stand by 24,600 to pay for your buyer's stamp duty. Why you need to pay using your own money is because CPF does not have enough time to release the money, right? CPF need a certain period to process the application and release the money. But you can redeem this money back from your CPF, and CPF will release the amount which you have paid for the stamp duty on legal completion. So just instruct your lawyer to apply for you, help you to apply for the CPF money to be reimbursed back to you on legal completion. So normally we fix a 10 weeks period, and on completion day is the one where we pay the balance. Okay, so this is a simple timeline to give you an overview of the private property resale transaction timeline. Okay, let's look at some statistics. Okay, so where are we now on the non-landed home prices? Is that the market is up 7.5% since the third quarter last year, third quarter 2018, where cooling measures started. Okay, if we look at the OCR, which is the black line, okay, the black curve, OCR is very active market. That's why it's on the top. But you notice the last bull run, the bull run since the 2018 is led largely by city fringe areas, which we saw a huge number of properties being transacted and also new launches. So that drove up the prices. Okay. So non-landed resale home prices. So the transactions are at the 10-year high. Okay. So if we look at the recent transactions, again, post-circuit breaker, huge jump in transaction, and these stayed quite consistent, okay, over the last couple of quarters. A lot of first-timers, we've been looking at the statistics, and quite a number of resale home buyers are actually first-timers, first-time buyers, all right, who are buying private resale for very simple reason. like I said, those that can afford it, instead of waiting for the BTO flat, they are coming into the private market. And also we have seen people who, due to 5-year MOP, sell their flat for nice price, and they use the profit that they make to upgrade into a private resale. So that's why we are seeing good buying momentum in the resale market. Okay, where are the hottest resale condo areas? Okay, in the various sectors. So this is a prime location. Okay, so may not be very relevant to HDB upgraders. Let's look at city fringe. HDB upgraders are known to buy in places like Sims Urban Oasis, which is the number 2 top selling, Waterbank at Dakota, okay, and even and Bartley Range, City Lights, all this. There are quite a number of HDB upgraders buying into those developments. Of course, for OCR, which is the playground of HDB upgraders, you will find that majority of the buyers who buy into these condominiums are actually upgrading from HDB. Okay, top 10 districts. District 19, right, is showing the most volume, followed by District 15 and so on. So these are the resale transactions. Now we're going to new launch. So if you are thinking of buying new launches, what is the timeline? So very quickly, the entire timeline and the progress payment is controlled by law. Okay, under housing developer rules, developers collect the payment at various stages of the transaction of the construction in accordance with the progress payment schedule. So this is non-negotiable. All right, when the time comes, you have to make payment. All right, so buyer pays a 5% booking fee when you book a unit from the developer. Developer will then grant you OTP. So within 14 days from there, the developer will have to send you the sales and purchase agreement. Now, this sales and purchase agreement is very important because this is your formal contract. All right, you need to sign on it within 21 days of receiving it. So once you sign on it and return it back to the developer, it becomes a legally binding contract. So this is the point of no return. You cannot back out after this. Of course, before that, you can still change your mind. All right, but if you change your mind, you will lose 25% of your booking fee of 5%, which works out to 1.25% of the purchase price. All right. So assuming you have signed your SMP, all right, again, within 14 days, you have to pay your buyer stamp duty. So for buying new projects, time is of the essence. So if you apply for the CPF, you take your own sweet time and you didn't apply for the CPF earlier, then you will end up having to pay this buyer stamp duty using your own money. All right. Very few people can meet the timeline. All right. They have to go to the lawyer's office very early in the contract to ensure that we put it in the application for CPF to release the money to you to pay this buyer stamp duty. But if you can't meet the timeline, then this buyer stamp duty will to be paid in cash. And then you can apply for reimbursement, but CPF will only pay you much later on. All right. So 8 weeks from the date of option, you will pay your 15%, and thereafter you will follow the progress payment schedule until TOP. The developer hand over the keys to you. You will pay 25%, all right, to the developer, and within 3 years from TOP will be the legal completion. So this is a timeline. If you need more details, you can always speak with our ERA trusted advisors, all right, who are on hand to advise you. All right, they are marketing most of the new projects in Singapore anyway. So let's look at the new home market. All right, so new home sales in March hit a 4-year high. All right, so we are seeing a huge uptick, all right, in new home sales since phase 3. All right, where are the hottest areas? So a large proportion is strange in the first quarter was in the CCR. Okay, we go on to so for city fringe projects for HDB upgraders, favorite will be Normanton Park, okay, Jadescape, Avenue South residents. We do see quite a number of HDB upgraders buying into those projects. Okay, so for OCR, which is suburban area, as earlier said, the number one selling is Treasures at Tampines, which is the top selling, right? Of course, other places like Park Clementes, all right, will be quite interesting for HDB owners. So top 10 District 5, a lot of action going on over there, right? District 5 will be on where Normanton Park and Park Clementes is, all right? Okay, where is the market heading now? Where is the market heading now? So last year during the COVID lockdown, the land sales slowed down significantly. All right, land sales slowed down significantly. So, and as a result, the unsold inventory, okay, unsold means the unsold stock that is from the developer side has been depleting. Okay, depleting because as you can remember earlier, we saw a huge upsurge, all right, in the sales post circuit breaker last year. All right, so increasing new and resale transactions depleted the unsold stock. So average, we are now seeing an average of rolling average of 14,000 units unsold. All right, 14,000 units unsold, which then, therefore, if you map this against the annual sales volume. Okay, for developer sales, we are already seeing about 10,000 units per year. For resale transaction, is another 10,000 units per year. So we actually, going forward, if I'm a developer, I'll be worrying because I'll run out of stock to sell, which then fuels the thought, all right, that developers would be looking to buy land, which is quite true. All right. So if we look at these numbers, all right, you see as at first quarter, we only have 15,000 units left unsold. All right. And 1 year, we can easily clear about 10 to 12,000 units. So this stock can only last 1 year and a bit, you know. So quite worrying for developers. Okay, so developers are very hungry for land. And if you saw the first land tender exercise this year, the Northumberland Road plot, the Farrer Park plot, 10 bidders, right? 10 bidders. Which then we are, all right, why? And both new and resale transaction volume were expected to increase. In the second half, to balance the market, we may see the government releasing more land for sale. But even they release more land for sale, this is not likely to come into the market immediately. Don't forget, after the developer buys the land through a land tender exercise, they will still need about 6 to 9 months for project planning. And any land that is sold in the second half, we can earliest be launched at least 1 year, middle of next year, right? So there is a transition time, right, for stock to come into the market. All right, and first half land sales is quite muted. All right, I mean the supply in the available, not land sales. The supply available, made available in the first half land sales is very muted. Okay, so therefore we are seeing more and more on-block sales coming up into the market. All right, more and more actually getting ready to launch or already in the market. So coming to the end of it, I just want everyone to know whether you are a first-time private property buyer or you are upgrader. That means you are existing HDB owner upgrading to private property. There is never the best time, all right, to buy a property. There are some people who say, I'll wait for price to come down. I can tell you this, in Singapore, the price, while there are ups and downs, over time, the trend is up. For a very simple reason, land is very limited. all right? And land is sold using tender. So when there's a new launch, developer will be aggressively selling their products. And there will be some time where the stock will deplete. When the stock deplete, the developer goes on a shopping spree to buy land, whether through land tender, okay, or through en bloc sales. Now, when you have developers competing for land in a very small market, land price will increase. So land price increase, new launch price will be higher. My colleagues have explained, in various seminars, we have always explained developers in today's market are extremely facing high challenge. Land price is high, construction cost remains high, they still have to make a profit. So therefore, you will notice for each new launch, all right, the prices will creep upwards. And when new launch prices increase, resale prices in the same location will increase. All right. So that's why if you ask me a very simple question, HDB price and private property price, if you put your money in private property, over time, you will benefit by just doing nothing. Just buy and wait and buy and put it there. The price will increase more than if you put it in HDB. All right. So essentially, I've come to the end of my seminar. I just want to share with you that if you are looking to, for example, just now I talked about Park Clementi.